Hello T-traders, you are watching a weekly stock market review presented to you by ИнстаФорекс news team and me, Kate Nidachina. Wall Street was dominated by bulls on Friday. Google and Morgan Stanley's robust third-quarter results drew cheers from investors. Up 11.35 points, the S&P 500 gained 0.7% to 1,744.5 points. Thus, the indicator added 2.4% on the week, with the technology sector rising the hardest. The Dow Jones strengthened 1.1% on the week to accumulate 28 points Friday, or 0.2% to 15,399.65 points. The technology heaviness the composite trailed 51.13 points, or 1.3% to settle at 3,914.28 points. The indicator jumped 3.2% on the week. The burst of activity on the stock market was contributed to the speculations that the Fed will continue buying bonds at $85 billion a month in the wake of budget standoff that closed government operations for 60 days. Congress has voted to reopen the government until January 15 and increase the debt ceiling through the middle of January as well. Thus, due to fiscal impasse in the USA, some of the economic indicators were not published, and the report on the non-farm payrolls will be released at 8:30 a.m. ET Tuesday. Besides economic data from China about stronger than expected GDP growth amid greater investment inflows in the second largest economy contributed to the market sentiment. The shares of the internet giant Google showed the most significant move, lifting $122.61 or 15% to $1,011.41, propelled by the quarterly reports. Since the beginning of the year, Google shares soared 40% to breach the level of $1,000 on Friday. The corporation's earnings surged 36% in the third quarter. Despite the worries about online advertisement prices, investors believe that the technology giant is on a solid growth trajectory. As a result, Google closed the Friday session 14% higher at $1,011.41. Meanwhile, Morgan Stanley shares edged up 2.6% after the financial report for the third quarter was released. The document reads that the bank's earnings increased 80% to $1 billion, supported by greater volumes of operations in the offices and lower expenses. The net revenue rose from $516 million in 2012, excluding commission for account maintenance. Thus, the profit rose 50 cents per share against 28 cents a year earlier. The revenue increased 7% to $8,100 million. Both indicators topped up the analyst expectations for 40 cents per share against the revenue of $7,600 million. It was Weekly Stock Market Review. Bye.